bar chart, I don't know if I'm going to steal his thunder or not, but they just announced that they're actually going to do real-time cryptocurrency exchange data streaming, right?
So, Mark here, Alberta. I am the CEO of BarChart. Some of you may know us from barchart.com. That's our media property. We also have a solutions business where we focus on market data, trading software, and digital solutions. So today I'm going to talk about, I've got 15 minutes, so it'll be relatively brief, the crypto landscape, the markets, the coins, the size, and the future. My background's always been market data with the Board of Trade, Chicago Board of Options Exchange, and I've been with BarChart for the past 10 years. In terms of crypto, my knowledge on this timeline is more towards the end. So I'm certainly no expert in this field, but we are slowly becoming more and more proficient in the landscape as we now carry this market data, and we are building tools around cryptocurrencies. So I'm going to talk a little bit about the fundamentals to start. I think the first few bullet points are, everyone here knows this stuff. I kind of want to focus mostly on the timeline to start, and it's a short timeline. Cryptocurrencies are still, really in their infancy, as I would say. On here we say in 2016, mainstream adoption. Well, I would say mainstream in terms of this audience, number one, and also in terms of the media. Mainstream, not in terms of the average Joe or Jane. There's some surveys out there. One of them by LandEDV says 48% of Americans are not sure if cryptocurrencies are legal, and 78% of Americans have heard of it. 14% have bought cryptocurrency. That number, I think, is, I don't know, maybe a little bit high to me. But, in terms of where we are at in the overall evolution, in terms of awareness or skepticism or acceptance, I kind of would personally compare it to autonomous vehicles, and in terms of where everyone says that is going to go, and in terms of how much of us would be willing to step outside right now and jump in a car and have you drive it home without touching the wheel, or facing the rear passenger seats and not even looking out the front window. So I think that's a fairly good analogy. With autonomous vehicles, you see obviously or logically a younger generation is saying yes, for sure, it's going to happen very quickly. Older generation tends to be a little bit more skeptical. However, both of those groups say they want, when it comes to features in new automobiles, everything or top features tend to be about safety. And the autonomous vehicles experts, they talk about those types of vehicles being more safer. So I think ultimately everyone might get what they want, and I think a lot of that is a similar theme in the crypto space. So a little bit about the market. So anyone know roughly how many crypto exchanges there are right now? Anyone want to throw any? Well, 163 according to CoinMarketCap as of about an hour ago. There's probably going to be a few more, or a few will be out of business within the day. So there's a lot. We've got up here share of Bitcoin trading by like the top 10 exchanges by USD, and then you could see other currencies in terms of what exchanges those are traded on in terms of Bitcoin. At the top, you've got Bitfinex. A lot of these, the daily notional volume, a lot of it changes day to day, which I don't quite know why, but I've noticed that looking at some of this data. Overall, you've got, let's say, 163 exchanges. I'll talk about how many coins in a little bit. Overall, daily notional volume, which, if you're not familiar with the term, that's basically the amount of currency issued or available times the price. Similar to stocks or futures, the price time the number of contracts or shares traded on the day. So overall, the total daily notional volume for cryptocurrencies, this is a 24-hour measure because they trade 24 hours 7, is 3.7 billion. By comparison, well, Bitcoin is 1.7 billion of that. By comparison, Google, just a single stock, is today close to $1 billion in notional. Gold futures, close to $500 million. And the E-mini S&P 500, trading at the CME, did about $3 billion in notional value today. So overall, Bitcoin, well, and throw out the FX, OTC FX market, that's at $5 trillion, probably even higher. Bitcoin and crypto is very, very, very small compared to those measures. And that's okay. Not a negative, it's just where we are in the evolution of this marketplace. So in terms of what's happening with some of these exchanges, Coinbase, who owns GDAX, they are the most popular in terms of a primary market for taking cash or your credit card and buying some initial Bitcoin or Ether through Coinbase. They recently raised $100 million, putting them at a $1.6 billion valuation. You're also seeing other mainstream brokers and wealth managers talk about the game. Fidelity, they are going to be integrating with Coinbase, so you can look at your Coinbase holdings through your Fidelity account. And their CEO, she's been a big supporter of it, even has said Fidelity does some of their own cryptocurrency mining. Other big firms, NEX out of London, big FX firm, they certainly are talking about it too in terms of being more of a mainstream brokerage firm offering access to these markets. With that said, the last bullet point down there, many of these venues are still cloaked in secrecy, and that is that's certainly a marketplace risk of not exactly knowing who's behind it, where their funding's coming from, etc. So the coins, first two bullets here, well, at least the first one, everyone knows that they're mediums of exchange. In terms of tokens, everyone know ICO? I mean, who's participated in an ICO? Okay, so like 5% maybe. So that's the new hot thing, new way of raising funds. Article was out a few days ago that from News BTC, Bitcoin News, they had said this is the brightest and darkest time in cryptocurrencies. ICOs right now, initial coin offerings are they're raging. There's hundreds of them happening. There's talk of SEC getting involved or people violating federal law through funding companies this way. So, China, and other countries have banned or are talking about banning them. The tokens, so essentially what an ICO is doing is they're offering tokens for sale. In some cases, shares of you get shares of the actual company, but in most cases not. You're getting promises to use those tokens to purchase their services or get early access to their software. It's been effective. There have been some bigger companies, Brave, who's involved in security-based browsers. They've raised a lot of money through ICOs. Others, you search ICO, the next word that comes up is probably fraud. They're not going to go away. And a lot of money has been raised through them. So these numbers here are looking at in the two charts here. Total market cap of cryptocurrency. You can see on the left is 155 billion. Again, Google, I didn't say Google's market cap, but just to compare it to something everyone's familiar with, Google's market cap is close to 700 billion. So again, crypto is 155 billion. Represented, Bitcoin is almost half of this. That being said, any guesses on, or anyone know how many coins there are right now available to be purchased or traded? Coins, number of coins. There's 1,000 coins. There are 1,157 coins right now that you could trade or invest from. Some of them have zero volume. Others, Bitcoin and Ether, Ripple, those are the only ones really. Most of the volume is in the top 10 to top 15. Another slide here showing the market cap by coin. Again, total market cap 155 billion. You can see the drop off is relatively quick. Most of these markets, compared to other financial assets and instruments, very small, but obviously growing. This here, similar slide is showing the notional volume, which I talked about at the start, showing daily 24-hour notional. That is the price times the number of currencies traded. So on the data side, we not really here to self-promote, but we have launched our own cryptocurrency data feed. Cryptocurrency data, most people are going to the exchanges to get it. We now carry all the exchanges, or nearly all the exchanges. So that is a major benefit of a data vendor. It's no different than what we do in the equity, futures, and options marketplaces, even and as well as FX, where we consolidate data across all the exchanges and make that available both as a blended price or an average, as well as make those prices available on a exchange by exchange basis. So again, really two ways to access the data is from the exchanges directly or through a consolidator. On the data itself, most of you are probably familiar with this. It's fairly basic. Exchange prices, you're seeing 10 to 15 active exchanges. Each exchange has its own unique price. One thing traders obviously are going to, if you're familiar with trading, you're going to think of arbitrage between those exchanges. It's it's being done. It's not easy at all. You can't really short cryptocurrencies yet without a futures market. There are some ways to do it. There are some ways to trade it on margin, but you must own it to still sell it short. There are going to be, we think, futures coming out. There is a Bitcoin investment trust that sells on the OTC market or trades on the OTC market. You can short that. That's not very accessible to most people, though. Some people have talked about tracking stocks, stocks like NVIDIA that are heavily followed because they develop a lot of the hardware for this space. So, that is another option that people are looking at when it comes to shorting activity. Other things on the price, obviously local pairs quoted in their own fiat currencies. Every major currency out there, different digitals are quoted within. Global prices, where these prices are aggregated across single fiat pairs instead of all domiciles. And then things like a global price. So we're putting that out as well, where you have an index of sort that is basically averaging prices amongst digital currencies quoted in multiple different currencies, traded across multiple different exchanges, and then blended into a single value, more of an indicative fair value. So on the future, I put up some of the key themes I think are going to be important. I don't think these are any secret. A lot of us would probably come up with the same stuff. Overall, you've probably heard this today. We're in the very early years. I still think it's pretty similar to autonomous vehicles, where there's a lot of uncertainty. There's going to be a lot of regulation. There's going to be a lot required in terms of innovation. one difference, I guess you could say, you know, in the crypto space, you know, you have 163 exchanges, over 1,100 different currencies. In the vehicle space, you know, you've got household names and much fewer players. So you really won't see the consolidation in that space. You know, regulation, that still is to be determined in both of those places. Volatility, that's a concern, obviously. To really be used mainstream, you know, volatility's got to be figured out. And fraud goes hand in hand with that. I think the regulation is, you know, when it comes to one of the major advantages of cryptocurrencies being fees, or again, not of typical transaction fees from banks. Those banks aren't going to necessarily sit around and let that happen. So, you know, regulation is going to make that more challenging, but cryptocurrency is born out of innovation, and I think as those challenges arise, you'll see even more innovation come out. That's it. Any questions? 2 questions? Any questions? Hopefully I can answer. I don't have an actual spread number, but I mean there's a deep order book. I mean it's really deep, and it's easy to get in and out. Very very tight. I mean I don't think there's that much arbitrage opportunities. There are some, but again you've got to be a major player to be able to take advantage of that. Sounds like a good idea to me. That's outside of my area. We sell data. Think so. One more, or one more. Since I couldn't answer that one. Well, I mean, you see it. You've seen it already. I mean, you see Fidelity. You know, they said they're mining these. You know, everyone has seen what Jamie Dimon said, and you know, then they came back and said J.P. Morgan. You know, they are investing in cryptocurrencies, but if you are a trader for J.P. Morgan and you're doing it on your own, you know, you're gonna be fired. So, you know, I think they're all involved. Certainly the hedge funds and you know, a lot of proprietary trading firms are either monitoring it heavily or I mean, you've seen some of the articles. You know, different developers at some of these firms, they're retiring at 36, 39 from just a few years run there. Thank you.